How y'all going, YouTube? How y'all doing today? I went to go pick up fertilizer this morning. They were completely out of fertilizer. This is the first time that's ever happened, so I don't know what's going on, but they told me to give them a call tomorrow morning to see what's going on. And yep, I'll have to, I guess, go pick up fertilizer tomorrow. It is what it is. I can't just make it appear out of thin air. So yep, today's tax day. I did speak to a CPA. I've been speaking to a CPA for a couple of days now, but they really I talked to the they gave me the nitty-gritty yesterday, and the CPA told me that I'd be getting a 1 month extension on my, he's going to file me for a 1 month extension on my taxes, because I told him, so he originally, I think that what happened was a CPA thought that my taxes were just going to be a straightforward, I file my W-2 and I just get my money, or file my taxes that way. But there was a lot of things that happened. Like I bought cattle, I bought equipment. There were a lot of things that happened. And so the CPA spent about 5 minutes talking to me. And he told me that, yep, he's going to file me for an extension. And he asked me certain things. And I listened to what he was talking about. And I was like, yep, I did real good on my taxes this year. Long story short, my CPA took a look at the numbers, and he told me that my income is probably going to be filed as negative. And so, at my job, for my W-2, I make just under $40,000 a year. And so on my W-2, I get filed for just under $40,000 a year. But he was telling me that all of this is tax deductible. So the $16,000 that I paid that I got in debt, I told him, I just straight up told him, I said, hey, I opened up credit lines, and I purchased these cattle on credit lines, and I purchased everything that I needed to take care of them on that credit line, and so I have it at the bank. And he told me all of that is tax deductible. He told me to just tell him how much I spent on the animals, and I have receipts and everything. And so the cattle, the feed, the grain drill, the tractor, the everything, the mower. He told me even if I bought it on debt, that I get to deduct the whole thing from my understanding. But he told me that we were going to go over it a little bit more thoroughly next month. He's going to file me for a 1 month extension, and he told me that I don't have to worry that the extension, I ain't gonna get charged a fee or anything. I gotta get some more. I gotta go get some that dust, that fly dust to put on these animals back. They're starting to get more flies again. But he told me that it ain't a big deal if I gotta get a 1 month extension. So yep, I'm getting a 1 month extension on my taxes, on the due date to file my taxes. And my accountant, the accountant that I'm working with, he's telling me that I need to file everything. I told him that I set up an LLC for this farm as a beef cattle operation last year. About 6-7 months ago, I had that LLC filed. And so he told me that this is a legitimate business, and I understood that this was a legitimate business. But it, when he said it to me to my face, something just kind of happened in my head, and I was like, oh yeah, I mean, it is what it is. He told me last year I made a net profit of about $700, but I went into debt about 40 grand. And so the $700 that I made in terms of net profit on this farm, the $700, that's my revenue. And so I need to file that $700, and then I can deduct the 40 grand. The 40 grand that I got in debt, I deduct all of it. I talked to him about it, and I told him that my monthly payment is like a $325 a month for the 40 grand. And he told me that I don't deduct the $325 a month. That I deduct well, I mean, I was talking to him, and I don't know if this is but I was talking to my CPA, and my CPA was telling we're gonna go over it again next month before I file my taxes. But from my understanding, I told him that I went about $40,000 into debt to purchase everything that I needed, and that my monthly payment was about $325. And he told me that, from my understanding, I don't deduct the $325 a month. I deduct the 40 grand. And so I'm essentially able to deduct my income for last year is going to be like negative $5,000 or something like that. Like my income will actually be negative. He was telling me that it's looking like my income is going to be negative, and that but in terms of taxes, it just is what it is. It's a good thing. And but he was actually telling me that that's a good thing in terms of my taxes. And so I said, okay, well, sounds good to me. If that's good, I mean, he's the accountant, right? And so I don't know for exactly for sure, but that's what it's looking like right now. But from what he was telling me, I may actually be kind of in a pickle here, where okay, so from my understanding, when I look at the appraisal of my property, the farmland in Texas has still not dropped in value. So from my understanding, I made something like $5,000 or $6,000 in the appreciation of this property last year, and that's unrealized gains. And then I also made about another $8,000 in the equity that I retained in my property via monthly payments to the debt. I have a mortgage on this farm. Come on, Bubba, you got to get down from the feed trough. I have a mortgage on this farm that I pay monthly on, and every single month I make a payment, and a portion of that payment goes into the equity that I retain in this property. And so I made about $8,000 through the equity that I retained, or something like that, $7,000. All in all, it comes out to be about $15,000 that I made this year on just the property alone. And then I don't pay. I have my agricultural timber card, and I also have this farm filed as a legitimate LLC, so I don't pay sales tax. I'm in the process of getting my property taxes removed, and so. Yep, and then I don't pay income tax either, because this right here, this is all tax benefits. Everything that the cattle that I brought in, I don't have to pay, or that's a tax deduction. The grass that I planted for these animals, that's a tax deduction. The leverage that I took to purchase the tractor, that's a tax deduction. The leverage that I took to purchase the grain drill, that's a tax deduction. Everything I got deducted off of my taxes, and so I don't pay income tax. I don't pay sales tax, and I'm in the process of not paying property tax either. And so, but this kind of put me in a precarious situation where if I liquidate these cattle, because I deducted their costs from my last year's taxes, if I liquidate these cattle, I may actually get put into a situation where on paper I'll have made about $120,000 this year, but I won't have actually made $120,000 this year. And so I'm kind of in the process right now of thinking about what can I do well, I mean, I'm kind of in a situation, because if on paper, let's say I deduct my cattle from my taxes this last year, I deduct my cattle from my taxes last year, and I liquidate them this year, and I take the money for them this year. If I hold on to that money instead of reinvesting it, it will look like income it will look like income for this year, when in reality it's not income for this year. I just deducted it from my taxes last year. And so on paper, if it looks like I made $120,000, I'll owe the tax man like 30-40 grand this year, and I don't have 30-40 grand. And so I got to think about, how am I going to leverage. Well, right now I'm kind of in the process, like in my mind, when I think about how much equity I retained in my property last year, as well as how much has it appreciated this year, or within the last year, and also the amount of equity that I will retain in this property this year, because of my continuous payments, as well as the appreciation on the property this year, I may have to collateralize this property for a loan to leverage for assets if I don't want to pay taxes again this year. Or if I don't do that, I essentially gotta figure out what can I tell the bank so that the bank gives me a loan for 150 grand. And then I need to, or about $150,000, and then I need to think about how much of that money do I spend so that I can reduce my income taxes. Because here in Texas, we don't pay a state income tax, but we do have a federal income tax. And past $41,000 up to about $80,000, the amount of tax is about 20%, and up to about 40,000, it's about 41,000. The tax rate is 12%. So in a worst case scenario, I would like to be able to at least drop my income to about 40,000. I'd like to be able to drop my income down to about 40,000. If at all possible. That means I'll have to invest like $75,000, and I'll have to. Okay, so the thing is, but this is all going to set me up very well to leverage for a loan from the USDA as well, because I told the CPA that this is a farm and it's a registered farm, and I told them about my cattle operation, and he's going to file it as a farm income. But once I have 2 years of farm income on my taxes, I'm going to qualify for that USDA loan, and the USDA loan is a 0% down loan. They will fund the entire thing up to $600,000, and their interest rates are very low, as well as their lending terms are very long. If I took a 20-year loan for a 2.5% interest rate, and then I took a 40-year loan at a 4.5% rate, the average would be about a 30-year loan on about 4.25%. And so ultimately that turns into me about purchasing a $500,000 property for about $2,000 a month. And a $500,000 property is about 75 acres, 50 to 75 acres. So I'd essentially be spending $2,000 a month to make about $50,000-$75,000 a year. So I'd be making a net profit of about $25,000 to $50,000 a year. Well, so if I set my taxes up correctly this year, I set my taxes up correctly last year, and I'm filing them this year, and I got that all set up properly. But I have to do that again this year to be able to qualify for that USDA loan. And once I qualify for that USDA loan, I'm kind of in this spot where it's like, man, if I liquidate my cattle, I need to bring in other cattle immediately, and I need to leverage for the and I need to leverage to bring in cattle, or I'm like, if I don't leverage for the cattle, the big thing is that if I sell these cattle and I take the money for these cattle and I hold on to the cash, what will happen is that the cash will get taxed. I'll get taxed like 25%. And if on paper I make $120,000, they will tax me like 30 grand. I'll have to write the government like a $30,000 check. And so right now what I'm thinking is that, but my income that's not on paper is the equity in this property. And so even if I make $120,000 on paper this year, and I made a negative $5,000 last year, because my taxes that I'm filing this year, it's on a piece of paper. On a piece of paper, my income will be negative. I do have a W-2 job, and I make just under $40,000 a year, but that income is going to go negative because I invested a lot of capital into this farm via debt, and so I'm able to write everything off. But if I liquidate my investments this year after having written them off last year, it'll look like that I got a huge pool of cash this year, which I didn't. But I deducted them already last year, and so the pool of cash that I get this year, I have to reinvest it, or I'll end up paying. It's not like, oh my God, I just got a bunch of cash. It's like I got a bunch of cash, and I'm gonna end up owing the government 25% of it. And so either I invest it, or I write the government a check for 25% of the amount of the money that I earned. And so if I need to, I need to think about how am I going to get a loan from the bank at a reasonable interest rate for a large sum of money. I mean, I may need a loan for like $100,000. If I don't get a loan for $100,000 and I don't invest it, I'll owe the government like 25 grand. And so I need to think about how am I going to get this loan and what am I going to invest the capital into. And I'm like, you know what? I have equity in this property, and this property has also appreciated from my understanding. And so I can get this property appraised. I can get a loan with this property collateralized for that loan, and then I can invest the debt, and I can write that off on my taxes again this year. And on a piece of paper, it'll look like I did tremendously well. From my understanding, on a piece of paper, it'll look like I made a tremendous sum of money on a farm, when in reality, all I did was just take debt and purchase assets with it, and then liquidate the assets and just do that again, I guess. I mean, long story short, what I don't want to do is I don't want to hold on to a large sum of cash, because if I hold on to a large sum of cash, I'm going to get taxed. Like if I took all these animals to the market right now and I left that market with $20,000, if I held on to that $20,000, I'm going to owe the government 7 grand. But if I took that $20,000 and I purchased more cattle with it, I won't owe the government anything, because because I've reinvested it becomes a business expense, and I cut it from my income tax. But the thing was that I was considering about raising animals from 4-weight animals up to a 7-weight. So instead of bringing in like little small pee-wee calves, I would go a little bit heavier, and I would bring in 4-weight cattle and raise them to 7-weight cattle. But if I do that, right, if I do that and I make money on that, that's only going to take me about 5-6 months. It will look like I have sold $40,000 worth of cattle in 1 year, $50,000 worth of cattle in 1 year, when I actually didn't do that. I took a large sum of debt and I purchased the cattle with it, and then I didn't actually make $50,000. Like the bank gave me 40 grand and I made 10 grand. But if the bank gives me 40 grand and I make 50 grand and I keep the 10 grand, even if I pay the bank back, it will still look like I have the money, because ultimately, well, actually, I don't know. I'll have to ask the accountant about that. But I'll ask him, if I take a loan for $40,000 and I purchase a bunch of cattle with it, and I sell the cattle for 50 grand and I make 10 grand, can I write the 40 grand? Well, I mean, okay, this I can write the 40 grand off as a business expense because I purchased cattle with it. But the thing is that if this happens again, like what happened this year, is where I purchased the cattle last year, I wrote it off on my taxes last year, and then I liquidated them the next year. It'll look like I'll be able to deduct my taxes early, but the next year it'll look like I made 50 grand when because I deducted the animals from my taxes the previous year. And so I need to think about what I'm gonna do right now. Today's tax day, and I got a 1 month extension on my taxes, but this year it's gonna look like I made negative 5 grand. But next year it's gonna look like I made 120 grand because of everything that's happening. And if this year I don't pay taxes, but next year I have to pay 30 grand, I'm in a lot of trouble. That's gonna be a big. I'm gonna be waist deep in some doo-doo. And so, I need to think about what am I gonna do, because I am preparing myself to liquidate these cattle. And if I liquidate these cattle at the market, I'll get money for them. I'll get money for them, and if I get money for them, and I deducted them the price of purchasing them, and as well as the prices of raising them from last year's taxes, it'll look like the money that I made from from liquidating these cattle all came from this year. And I'll have to pay a tremendous amount of money in taxes. And the higher the income goes, the more the higher the tax bracket, the higher the tax percentages. And so realistically, if I well, in my mind, the best thing for me to do is if I is to be in like this pay zero tax territory, and it's done completely legally. I mean, cattle, like if I have a registered farm, an LLC farm, and it's a beef cattle operation. If I purchase beef animals, that's a tax deduction, and so I can deduct that from my income. And so, and then I can deduct the cost of the grass seed. I can deduct the grain drill. I can deduct everything that it takes to raise the beef animals. I can deduct all of that. But it's kind of like this perpetual I have to stay on top of my taxes, because if I don't stay on top of my taxes and then I end up owing the government 30 grand, I'm in some deep trouble. Yeah, that's gonna be a big problem, And so now, right now, I'm kind of thinking I may need to get myself ready to go into the bank and ask them for like a $50,000 loan. And I'm kind of in my head, I'm kind of formulating what am I going to talk to the banker about. And I think that what I may end up having to do is collateralizing this property. If I collateralize this property, I should be able to obtain enough debt to purchase enough assets to shrink my 120 grand down substantially. Possibly even by where I want to be is under 40,000. Where I actually really want to be is zero income. Like if I could well, in an optimal situation, I would have zero income. Even if I made 120 grand a year, I would still optimally like to be able to legally file my paperwork for zero income, because if taxes are a tremendous sum of money. It takes a lot of money to pay taxes, and so I'll have to well, I spoke with my CPA yesterday, and today's tax day, and they got me a 1-month extension. So now I'm already thinking about what am I going to do for my next year's taxes, and I know that well, he is going to file my farm for farm income, and that's going to put me in a real good spot to leverage for a USDA loan, and it's going to make my paperwork look really good. But yep, I'm in a real good spot to get that USDA loan next year. My farm's going to look like it had made a tremendous sum of money, when in reality, I'm going to look like I had made a tremendous sum of money. But in reality, my income is actually negative. This year, I'm going to have to think about what am I going to do to drop my taxes, or I'm going to owe a lot of money in taxes. But yep, okay, y'all have a good one today, YouTube. That's it for me.